Hello, everybody, and welcome to welcome to Option Pit, your home for volatility trading and option education. It is I, Andrew Giovinazzi, Chief Operating Officer of saidoptionpit.com. Welcome to Tuesday, or as one of my clients, Ray, just called it, Turnaround Tuesday. And his point is, we've been toying with this D's high for SPX for 5 freaking months now. Anyway, Mark's lesson here, bond volatility going higher. Well, you know what? Just looking at the TLT, lumber liquidators, that thing is just a toast piece of junk. Okay, all we can say real simple here, you got kind of a breakdown for bonds. Who knows how far it's going to go? Clearly, there's a disconnect right now between the bond market, what the Fed and the ECB are doing, and what investors are doing with their feet, which is selling bonds and driving rates higher. Now, all I know is that the stampede of people trading bonds is pretty big. And right now, there's clearly an I'm getting out of the way mentality. So there's still a lot of dislocation in Europe with the Bund relative to all of the supposed easing that's going on over there. And one of the things is we have a strategy letter trade on that we thought an upside fly right now doesn't look very good. But the reality is the market is doing strange things. When the market does strange things, volatility goes up, and until the strange things stop, the volatility is probably going to keep going up. So while we had the Goldilocks rally on the jobs report, okay, let's see here. I'm getting piped through, right? The sell-off is very, very orderly. True, but it's still a sell-off, right? And we also saw a real orderly sell-off in oil this year, right? So the thing is, when something goes in one direction for a very long time, it makes other parts of the market nervous until that direction stops. Okay? And for right now, I would say, yeah, we're having a really orderly but very sustained sell-off here. So all of this stuff about lower rates that we thought about, a couple years ago, or higher rates, maybe starts to come to pass, right? But I think this has more to do with what's going on in Europe and the ultra low rates that are there, and it's spilling over into our market. Okay, so we're having trouble making and keeping new highs, mostly because the story here hasn't really improved. Like, we've had catalysts over the last few years. Do you guys remember the fiscal cliff? Do you remember the sequester, right? 2013, right? Biggest rally we've had in I don't know how long after those things. So, and as far as the corporate earnings picture here was getting good until the dollar started to smack it around. So as far as like the big stories that can move us short term besides QE, we're not really finding a lot of those lately. And that's the reality. There isn't enough to drive us higher, even though global conditions really don't look that bad. I mean, and that's the reality. So we will look for some vol trades in the chat today. Seeing what the condition we have is. Oil still looking pretty good. Probably more has to do with the dollar plunging than anything else. We're not seeing massive moves in VIX, right, yet. We're seeing moves for sure, but most of those moves are just trying to keep pace with the realized vol that we're seeing now. Okay, so at least from right now, from the volatility part of the world, everything is moving what I would say kind of normally for a market that's sliding. Vol should go up, right? And that's what we have. So in the chat today, we'll also look at some trades that'll take advantage of some of the bond volatility that we're seeing and some of the overall volatility that we're seeing. Okay. And with that, you all have a good day. But again, the back and forth that we've seen in the indexes, right? If you think hard about it, what has changed enough to make the condition that we have go away? Is there anything that has been created that's so bullish that makes us want to rally to new highs? Not really, right? But has there been anything that's come out that's so terrible it's going to make us crash? Not really. Right? So we're going to see probably a lot more of this action until the market gets over the fact that rates will be rising in the future. And as of right now, that's not there. Okay? All right, everybody. You all have a good day, and I will see you in the option pit chat in all of our classes and things like that throughout the week. Bye-bye.